So imagine you're just staring at your screen.
Oh yeah, the classic trader stare.
Right. And you're down, I don't know, maybe 500 bucks on a trade that was supposed to be like an absolute sure
The
thing.
ones that always hurt the most.
Exactly. And your carefully written trading plan, the one you actually paste right to the edge of your monitor,
Yeah.
it says it's time to walk away, just close the laptop. But your hand is like already moving to the mouse.
You can't even stop it.
You literally can't. You're about to double your position size on this completely irrational impulse just to win that money back right now. And I think the big question is, why does your brain, in that specific moment, suddenly want to just destroy your own bank account?
It really feels like temporary insanity, doesn't it?
It does. Like you've been possessed or something.
Well, from a neurological standpoint, it kind of is. I mean, the systems we rely on to be rational, they just completely short circuit.
Welcome to the deep dive. Today, we are looking at this really frustrating paradox that affects so many of you out there. Okay, let's unpack this because we want to know why incredibly smart people with mathematically sound strategies, still manage to just completely blow up their crypto futures accounts.
It happens every single day.
It does. So our mission today is to dissect the neuroscience of financial failure. We're going to get into why bad strategy isn't actually the real enemy here.
Right.
And we're going to explore a really fascinating brand new technological solution. It's called the Crypto Discipline Tool, which is this Chrome extension designed to step in exactly when your willpower basically collapses.
Yeah, the overarching theme in the source material we're looking at today, it really flips our traditional understanding of financial discipline on its head.
How so?
Well, for decades, I mean, the industry has kind of operated on this assumption that if you just build a better spreadsheet,
Yeah, like just get the math right.
Exactly. Calculate your risk to reward ratio perfectly and just quote unquote try harder and you will succeed.
The old try harder method.
Yeah, which fails miserably. The data shows we are moving away from treating trading as this pure math problem.
Right.
We're recognizing it for what it actually is, which is essentially biological warfare.
Biological warfare. I love that framing.
Mm.
So let's get right to the core of that warfare. The biggest myth we need to dismantle right now is that traders lose money because their strategy is flawed.
That's a huge myth.
The sources are super definitive on this. Most crypto futures traders actually have totally fine strategies.
Yeah, they know what they're doing.
But they lose because their emotions take the wheel and literally drive them off a cliff. And the first and maybe the most destructive emotional trap highlighted in our material is revenge trading.
Oh, revenge trading. It is fascinating because it completely defies all logic.
Like zero logic involved.
Right, because a rational brain, it processes a $500 loss as just data.
Just numbers on a screen.
Exactly. It says, okay, the market conditions changed, my setup failed, I've hit my risk limit for the morning, so I'll evaluate and wait.
Which is what you're supposed to do.
But the emotional brain processes that exact same loss as a personal attack.
Wow. A personal attack.
Yeah. The immediate overwhelming urge is just to win it back right this second. So the trader instantly opens another position, usually without any valid market setup at all.
Just totally making it up.
Just clicking buttons.
Yeah.
And often with larger size. So suddenly a $500 planned loss becomes this devastating $1,500 uncontrolled loss.
So you aren't really even trading the market anymore at that point. You're just fighting the memory of the last 5 minutes.
Precisely. You're fighting yourself.
And that ties into another major trap detailed in our stack of sources, which is FOMO, the fear of missing out.
Oh, yeah.
The sources actually describe the physical reaction to seeing a massive green candle. You know, like a huge upward price movement on the chart.
It gets the heart racing.
It does. The trader sees the train leaving the station, panics about missing the profit, and just leaps onto the tracks without even checking if another train is coming the other way.
And buying the top of a momentary spike like that is a classic FOMO outcome. I mean, it almost always results in buying right before the trend reverses and just crashes.
Of course. And then we have what the poker world refers to as tilting.
Ah, tilting.
Which happens when a trader experiences like 3 or 4 consecutive, pretty standard losses. But the frustration boils over into sheer anger.
Yeah, the trader starts to feel like the exchange algorithm is, personally hunting their specific account.
Like Binance has it out for them.
Exactly. And out of sheer spite, they throw out all risk management rules. They take this massive, completely uncalculated bet just to, force the universe to give them a win.
Which usually leads to the ultimate fatal error, which is ignoring your stop losses.
The worst thing you can do.
Right. It's that delusional whisper in your head of, oh, it will come back. It'll definitely come back.
Then it doesn't.
You watch the price drop right past your safety net, and instead of taking the small paper cut you planned for, you just cancel the stop loss entirely.
You're just holding on to a sinking ship at that point.
Exactly. You hold on until your entire account faces liquidation, meaning the exchange just automatically wipes out your whole balance because you literally don't have the funds to cover the expanding loss anymore.
And, take every single one of those emotional traps we just talked about and pour gasoline all over them.
Hey, what's the gasoline?
That gasoline is leverage.
Yeah.
Because in crypto futures, you aren't just trading with your base capital.
Right.
The sources point out that traders frequently use 20x leverage, which means every single dollar you commit is magnified 20 times by the exchange.
Wait, 20x. So which turns a minor emotional slip-up into just a totally catastrophic event.
Oh, absolutely.
One moment of tilting, one aggressive revenge trade on 20x leverage, it doesn't just cost you your daily profit.
No, it wipes out a month of careful, disciplined work in 45 seconds.
That is terrifying.
It is. What's fascinating here is the underlying neuroscience explaining why this happens. It's probably the most revealing part of our research.
Yeah, because why do otherwise super rational professionals suddenly act like degenerate gamblers in a panic?
Well, it turns out experiencing a financial loss activates the exact same regions in the human brain as experiencing acute physical pain.
Wait, really? Hold on. So my brain literally cannot distinguish between, touching a hot stove and watching a Bitcoin chart go red?
Basically, yes.
That seems like a massive evolutionary glitch.
Well, it is an evolutionary mismatch for sure, because for hundreds of thousands of years, our brains evolved to react instantly to physical threats to keep us alive, right?
Yeah, run from the tiger.
Exactly. When you experience physical pain, your body just floods with the stress hormones. And under that acute stress, the prefrontal cortex,
Which is the logical part, right?
right, the advanced part of your brain responsible for rational thinking, planning, executing that carefully crafted trading strategy, it literally goes offline.
Wow.
The brain redirects all its energy to the amygdala, which is the primitive fight-or-flight center.
So trying to rely on willpower in the middle of a bad trade is essentially like trying to rely on a grocery list when you are absolutely starving in the cookie aisle.
That's a great way to put it.
The rational plan is there in your pocket, right? But the amygdala has already taken the shopping cart and is just throwing double-stuffed Oreos into it.
Exactly. The biology makes traditional advice completely useless in the moment.
Right.
Traders tell themselves they will be more disciplined. They write these strict rules. They set alarms on their phones. They stick Post-it notes all around their monitors saying, do not revenge trade.
We've all seen those desk setups.
Oh, yeah. But when the prefrontal cortex shuts down, you literally are not reading the Post-it notes.
You can't even see them.
Your brain doesn't care about a piece of paper. It is in full fight-or-flight mode, desperately trying to escape the pain of that financial loss.
Which makes total sense. And our sources actually dive pretty deeply into how the industry has historically tried to fix this. Things like trading journals, EdgeWonk, or TraderSync. Those are universally recommended.
They're the gold standard for traditional advice.
Right. The standard loop is that you finish your chaotic trading session, you open up your journal software, and you log all your trades.
Yeah.
You look at the data, you see the massive loss you took because you tilted, and you just sit there on a Sunday afternoon feeling terrible about it, promising yourself, okay, I'll do better tomorrow.
And that post-game analysis, it's essentially an autopsy.
An autopsy. Ouch.
I mean, it tells you exactly what killed your account, but it does absolutely nothing to stop the bullet while it is actually flying toward you.
Wait, so are we saying self-reflection is basically useless here? Because discarding the whole idea of journaling entirely feels, I don't know, a bit defeatist. Aren't humans capable of learning from their mistakes?
Oh, sure. Self-reflection is highly effective, but for refining your technical strategy.
Okay.
If you want to figure out if your moving average crossover, meaning checking, if the specific technical chart signals you use to enter a trade are mathematically profitable over 100 attempts, then a journal is the perfect tool for that.
Right, because you need historical data to test the math.
Exactly. But a journal is fundamentally useless for impulse control.
Because the journal isn't actually in the room with you when the amygdala takes over.
Bingo. The journal only exists after the damage is done. The next time you are at your desk and that biological hijack happens again, the memory of your depressing Sunday afternoon journal review just evaporates.
It's gone.
gone. The core concept emphasized in the sources is that traders do not need more post-trade analysis.
Okay. What do they need?
What you actually need is a sober version of yourself protecting the drunk version of yourself.
Wow. Okay, so if human willpower is chemically erased during a trade, the only logical solution is to essentially remove the human from the moment of execution entirely.
Precise.
And our sources point to a brand new way to do exactly that, introducing the crypto discipline tool.
Yes, this is a really fascinating development.
It's a Chrome extension, and it completely changes the timing of the intervention. It doesn't analyze your failure after the session. And it doesn't just sit on your desk before the session. Here's where it gets really interesting. It intervenes at the exact moment your finger clicks the mouse.
Intercepting the action right at the point of failure is a massive paradigm shift.
It's essentially a breathalyzer for your crypto wallet.
That's exactly what it is.
Let's walk through how this mechanically functions. So you install the extension in your browser, and it actively monitors 7 major exchanges. We're talking Binance, OKX, Bybit, BitGet, MEXC, BingX, and LBank.
Basically everywhere people trade futures.
Right. So you are staring at the chart. The FOMO hits you hard. You type in your heavily leveraged order size, and you go to click Buy Long.
Here it comes.
But instead of the order instantly going to the exchange, the tool freezes the screen.
Just stops it cold.
A pop-up checklist appears, it blocks the transaction, and it forces you to answer a single question. How are you feeling right now?
And the genius of that pop-up is in the psychological mechanism known as effect labeling.
Effect labeling. Explain that.
So you cannot proceed until you actively categorize your emotional state from a list. The options are calm, excited, angry, anxious, or on tilt.
Which forces this sort of micro-pause. Because having to actually read the word angry, recognize that you are currently, in fact, very angry,
Yeah.
and then click that specific button, it forces the prefrontal cortex to reboot.
Exactly. It breaks that hypnotic high adrenaline spell of the flashing chart.
Yeah.
You are actively pulling energy away from the amygdala and forcing the logic center to process language and self-awareness again.
That's brilliant.
And sometimes that micropause is literally all it takes to make a trader say, whoa, what am I doing? And cancel a terrible order.
Just snapping them out of it.
But the tool doesn't just rely on psychological nudges. It incorporates hard mechanical risk controls.
Right, because sometimes you're so tilted the nudge isn't enough.
Exactly. This is where the sober you truly takes the wheel. When you are calm, you configure the tool's daily loss limits. If your account hits that predetermined limit during a chaotic session, the tool physically locks you out of the exchange interface. If the buy and sell buttons are disabled, you cannot place another trade that day.
So it literally takes the weapon out of your hands entirely.
Yes.
The sources also highlight these emotion-based lockouts, which I found so cool.
Oh, those are intense.
Yeah. Let's say you get that pop-up checklist, and you honestly select angry 3 times in a single afternoon. The extension detects the pattern, it initiates a mandatory break, and it just locks the screen. It essentially forces you to go take a walk.
Get away from the desk.
Right. And for moments of absolute panic, where you feel yourself just entirely losing control, there is a literal force break panic button you can smash that instantly freezes all trading activity.
We are looking at the literal outsourcing of discipline here.
Outsourcing discipline, I like that.
Acknowledging that human willpower is a finite resource that drops to zero under extreme biological stress that allows us to offload that discipline to a piece of software.
Because the software doesn't get stressed.
Right. The software doesn't have an amygdala. It doesn't feel the sting of a losing trade. It purely executes the boundaries you established when your prefrontal cortex was fully operational.
Okay, so we've covered how it physically intercepts the bad trade in the moment. But the second half of these sources dives deep into the long-term behavioral changes this actually creates.
Yeah, it's not just a quick fix.
Right. Introducing this daily friction doesn't just save money on a Tuesday. It fundamentally rewires a trader's self-awareness over months. The data tracking side of this tool is where it shifts from being just a shield to being a mirror.
If we connect this to the bigger picture, human memory is incredibly flawed, right?
Ah.
Especially when ego is involved.
Oh, absolutely.
Cognitive dissonance makes us remember our brilliant winning trades perfectly, while conveniently blurring out how chaotic and completely out of control we felt during our massive losses.
We just tell ourselves we got unlucky.
Exactly. Just bad luck. But because this tool forces you to log your emotion with every single trade attempt, it builds this objective database of your psychological patterns over time.
And objective data cuts right through the ego.
It really does.
You might pull up your dashboard and see an undeniable statistic.
Yeah.
Something like, I have an 80% win rate when I trade calm, but my win rate drops to 12% when I trade anxious.
The numbers don't lie.
Your memory might lie to you all day long, but the spreadsheet tracking your own affect labeling over 1,000 trades does not.
The tool utilizes this feature called the Tiltmeter, which visualizes your emotional trends over weeks.
Okay.
A trader can look at a graph and literally see their frustration building up over a month. They can see the direct correlation between a spike in anxiety and a massive dip in their profit and loss curve.
Now, what really caught my eye in these sources wasn't just the visual lockouts or the basic tracking. It was the AI engine working in the background, the Edge Finder.
Oh, the Edge Finder is a game changer.
Explain how that works.
So it cross-references your emotional state data with your actual trading results and market conditions to mathematically identify your strengths and weaknesses.
Okay.
Finding an edge in trading is usually about technical indicators, right? But this AI finds your psychological edge.
That is so cool.
It might analyze your history and explicitly point out, hey, your highest probability of profit occurs on Tuesday mornings when you log your state as calm, but your highest probability of severe loss occurs on Friday afternoons when you log your state as anxious.
I want you, the listener, to just visualize for a second what your own personal tilt meter would look like right now.
That's a scary thought for some.
Right. Think about your last month of making decisions, financial, professional, or just personal. Would the graph show a steady green line of calm logic, or would it be spiking violently into the red zone of anxiety and tilt?
It requires a high level of vulnerability to actually look at that.
Facing objective data about your own emotional stability is a super confronting thought.
It is, and the developers behind the software address this directly with their core design philosophy. They describe the tool as a mirror, not a cop.
A mirror, not a sock.
Right. It is not an external authority designed to punish you. It is simply showing you a reflection of your own historical choices and asking if you really want to repeat them today.
And the software actually gives you the flexibility to choose the level of intervention, which is nice.
Yeah, it's highly customizable.
The sources detail a soft mode and a hard mode. So if you configure it to soft mode, it operates purely as a warning system.
Just a tap on the shoulder.
Yeah, it sees you are about to break a rule, throws up a warning saying, hey, you are heavily tilted right now. Are you sure you want to take this highly leveraged position? But it leaves that final click up to you.
Right.
Whereas hard mode is where it removes your agency entirely and just blocks the trade.
Yeah.
And the crucial distinction is that it's blocking you because the rational distinction you previously authorized it to do so.
And the architecture supporting this entire system, it relies on absolute privacy.
Which is huge.
Massive. The sources make a point to highlight that all of this data, your trading history, your liquidations, your emotional states, your daily profit and loss, it stays entirely local on your own device.
Wait, really? No cloud storage?
None. There is no central server vacuuming up your data, no cloud tracking, no tech company analyzing your failures.
Which completely changes the user's relationship with the software, honestly.
Absolutely.
Because if you felt like some corporation was watching you fail, the natural human instinct would be to lie.
Of course.
You'd get that pop-up checklist, your heart would be pounding out of your chest because you just lost $1,000, but you'd click calm just to save face with the server.
Exactly. Removing the feeling of being policed by an outside authority is literally the only way to get accurate data.
That makes total sense.
The tool was actually built by a developer who kept losing their own money to revenge trading.
Oh, really? So they built it for themselves?
Yeah. They understood intimately that traders are deeply secretive and super defensive about their losses. So, because the data never leaves your hard drive, you can afford to be brutally honest with the checklist.
Right.
And being brutally honest with the software is the first step to being brutally honest with yourself.
Okay, let's pull all these threads together. The core insights from today's sources really deliver a hard truth here.
A very hard truth.
The real enemy in crypto futures, or honestly any high-stakes financial environment, is not the market algorithm. It is not the institutional whales manipulating the price. The enemy is our own biology.
It's us.
It's us.
Yeah.
When we experience financial loss, our brains flood with the exact same stress chemicals as if we were experiencing physical pain. It shuts down our rational prefrontal cortex and hands total control over to our fight-or-flight instincts.
And relying on sheer willpower, Writing sticky notes or reviewing your mistakes in a journal hours after the session is already over.
Right.
It fails entirely because those methods do not intervene during the actual biological hijack.
The key to surviving the crypto markets and actually retaining the money you make isn't about endlessly tweaking your technical strategy. It's about building digital guardrails.
Absolutely.
It's about recognizing human limitation and implementing a system that intercepts our worst impulses at the exact microsecond of decision. And for those of you listening who are just exhausted by the cycle of watching your amygdala drain your wallet, you can test this entire concept yourself.
Highly recommend it.
The sources note that the Crypto Discipline tool is completely free to install right now on the Chrome Web Store.
Implementing a software breathalyzer for your crypto wallet is a massive evolution in personal finance. But, this entire concept raises a question that extends far beyond just the financial markets.
Oh, like what?
Well, the philosophy of a mirror, not a cop forcing a micropause. It's incredibly effective, right?
Yep.
Considering how easily our brains are hijacked by stress and emotion, what other areas of our digital lives desperately need an emotional interception button before we click?
Oh, wow. I mean, think about the hours completely lost to endless doom scrolling on social media when you are already feeling depressed.
Exactly.
Or the sheer amount of money spent on late-night, anxiety-driven online shopping just to feel a brief hit of dopamine.
You've all been there.
What about the irreversible professional damage done by drafting and sending a blistering angry email at 11 o'clock at night?
The worst.
What if, before you could hit send or check out or refresh, your browser froze the screen and forced you to answer? How are you feeling right now? Would you still click the button?
It really challenges the assumption that frictionless technology is always better, because sometimes friction is the only thing that saves us from ourselves.
That is a phenomenal thought to leave you with. We started this deep dive discussing how we desperately want our financial systems to be clean, calculable, mathematical equations. But the reality of human behavior is messy, it's emotional, and it's biologically chaotic.
It really is.
Maybe the future of succeeding in high-stakes environments isn't about perfectly predicting the market. Maybe it's just about perfectly intercepting ourselves. Thanks for joining us for this deep dive.
Until next time, stay rational and take care.